Welcome to Cheques and Balances. I'm Michael Vincent. This is James Blair. And this week, our predictions.
So this week, Mike, mirror, mirror on the wall.
Who's the prettiest of them all?
And also, who has the best predictions? I think you're the prettiest. That's all right. I got other features, so my mum tells me. So this week's episode, we thought we'd have a little bit of fun, where we give you our predictions. Because ghosts give predictions.
Yeah, okay, nice.
So right now, flashing disclaimer down the bottom.
This is regulated financial advice. You should put all of it. Wait, no.
No, we're not doing that, Michael. Remember, you're a financial advisor too.
Yeah.
So this is just a little bit of fun. We thought this week, we thought we'd give you some bold predictions on where we think we see markets, the world, going over the next 3, 6, 12. I've got one over the next few years.
Yeah.
Just to give you an idea of what we're thinking. We're in money every day, where we think things might go.
Yeah, and we'll hold ourselves accountable to these. So at some point in the future, we'll do a review. I'll tell you how many you got wrong. I'll throw it in your face. I got them all right.
Yeah, so I'm giving 3 predictions, so I'll probably be 0 from 3.
I'm giving about 100, so we'll see how that goes.
Yeah, so we'll give each of our predictions, and then maybe we'll debate a little bit, because I know there's one, Michael, where our predictions go completely against each other.
Yeah, they're pretty opposite. I'll give you that.
It might have something to do with the sign behind us as well, that prediction.
It will.
So, Michael, kick us off. Prediction number 1 from Michael Mystic Vincent.
I'm going to go back a bit. Let's get the boring crap out of the way first. Interest rates. Everyone probably wants to hear what we think about interest rates. They're going to rise. They're going to rise over the next few years as the Reserve Bank continues to fight rising house prices and inflation that's sort of creeping into the economy as well, and arguably has been in there for a little while. So let's just call that. We don't really have to talk about it. You don't have anything else to say about that one?
I definitely have other things to say. You can't just say interest rates are going to increase, Mike.
Oof, okay.
How much are they going to increase by?
Well, Adrian was predicting, is sort of
I don't want to know what Adrian thinks. I want to know what Mystic Mike has to say.
They'll go back around 4 or 5% for a 2 or 3 year rate. That is where monetary policy is most effective, when interest rates are around there. So I predict that they'll reversion to the mean. They'll come back to that average.
And 4 or 5% for 2 to 3. Where are they? Because they're moving a little bit at the moment. Where are they roughly at the moment?
Well, today they're around that sort of high 2s, low 3s for 3 year, and around that sort of mid to high 2s for 2 years, depending on the bank.
Yeah.
But yeah, you'll see that absolutely increase over time. I guess the winners out of that, the Reserve Bank, they get to control monetary policy a little bit, or inflation and hopefully house prices for them a little bit easier. The losers out of that, effectively everyone who has large amounts of debt, which is a lot of the country because interest rates have been so low for so long.
Yeah, I think that's a fair one. That's one that impacts lots of people. And then the ramifications of interest rates, obviously inflation, interest rates, and it impacts quite a few different assets as well, right?
Yep.
Cool.
Good
one.
Let's get that out of the way. Right.
Okay. My first prediction. See, you've been a little bit boring. I'm going to be highly controversial here. Bitcoin to 0. Now, I might not be right.
I know what you were.
Yeah.
Okay, so give me a time frame on that. You're predicting Bitcoin, the value of Bitcoin falls to 0 by when?
I'd say 12 to 24 months.
Okay.
Do you know the other great thing about saying 12 to 24 months? Also means when we do the next prediction episode, I can go, we've got a little bit more time.
Months out. Yeah.
And I'll explain to you why I think Bitcoin will go to 0. And it actually really comes off an article that the managing director of Magellan, which is a large fund manager, wrote recently. It's a few different aspects. The first one is that a lot, not all, but a lot of the people invested in cryptocurrencies, it's their first ever investment. So they're not used to investing in shares or property. They've had a little bit of FOMO and they've got into cryptocurrency.
Okay.
So when cryptocurrency, it's been very volatile for the last, 3 odd months?
Forever.
Yeah. But in a downwards trajectory for the last 3 odd months. When that becomes, drop further in the future, those who are first-time investors, hoping to go to the moon, end up going to the floor, will really struggle with that, and that will have an impact.
Okay.
So that's not the real one that I'm worried about. The main one I'm worried about is it's unregulated and it's quite difficult to tax. So governments are going to want their piece of the pie eventually. So this article that was written was forecasting that essentially governments will build their own cryptocurrencies and ban those that are already pre-existing, which will result in something like Bitcoin going to zero.
Okay, so I mean, I don't necessarily have an opinion or a view on the value of Bitcoin, but if I look at your statement, what you're saying is that as soon as there is a significant drop or perhaps market correction in the value of Bitcoin, that first-time investors will be scared off. I would argue you've already seen that multiple times and that the value is continuing to rise. The piece around governments banning cryptocurrency, well, I think effectively, how do you ban something that isn't physical, can be held on cold storage? I don't really see how that plays out over the long term, and it is decentralized, which means it sits outside of governments anyway.
Yeah.
So I understand that. I think I'm not sure how you would ban it so much. If a government was to ban it, it would signal to the market probably quite a large market correction. But I just can't see it going to zero. Toast is flashing numbers at us like we're going out of business. So do you want to wrap up on this one? I mean.
Yeah, I think we've seen what happened when China took its stance around cryptocurrency and Bitcoin, and it had a significant impact. If other world markets, if Europe, if the States, if our parts of the world take a similar stance, I think it will have a significant impact. And if the government gets involved and goes, here's essentially a local, or depending how it's built, a international currency, and the ease of use is there, they break it down, that could become quite attractive and have an impact to those that are already set up.
Yeah, I guess. For me, when the underlying technology, the blockchain, has so many uses, it just makes sense for a currency to sit on top of that, whether that's inside or outside of government control.
What we're doing today, Mike, we're being
is.
controversial. And certainly, I'm not just going to talk about interest rate. Everyone knows interest rates.
Yeah.
Nobody calling Bitcoin to zero.
Yeah.
What have you got for me next? Be controversial. Let me debate you.
Yeah, okay. So what I'm going to call is perhaps the next industries to pop or to really pop. So, if you're looking at parking your capital, whether that's your human capital, so where you should look for a job, or if you have spare, funds where you should perhaps invest. Once again, not financial advice. For me, the obvious sort of sectors that could really do with a significant gain or have some potential upside there, anything with monopolistic competition. So you're looking at the likes of medtech, education technology, fintech, although that's arguably already happening at the moment. So if I focus on something like medical technology in that sector or segment of the economy, you have established players in the game. You have a really poor customer experience. No one likes going to the doctor. They don't like the waiting times. They don't like the experience they get. They don't like the outcome. There's a lot of customer experience there that can be improved. And what that actually represents is a really big transfer of wealth or stakeholder value from the incumbents to players who are ready to get into that market and sort of change the game, for lack of a better term. So that is sort of my prediction of the next sort of industries to pop. I know they're all tech, but it would be medtech, fintech, and education technology.
Yeah, I certainly agree with it. I signed up for, as my home GP, one of the online doctors. And I can see where they're going. I've got an app on my phone. I can video call someone. But at a certain point, you've got to go and see the doctor. And because they don't have that scale yet, they said, James, go and see a doctor 45 minutes away from you because that's our only practice in Auckland.
Yeah.
So I can certainly see where they're going, but it'll be interesting to see how quickly they get there.
Yeah, and if you think about it on a more macro scale, what you're looking at is governments picking up a lot of the tab. So there is a huge cost there for institutional players that retail or everyday people don't see when they're using the doctor or those sorts of facilities. And I think that's probably where a lot of the value is going to be derived from, and that's where a lot of the innovation will be driven.
Yep, nice. Okay. My next prediction is house prices will plateau over 3 years. It's not good for the mortgage business, is it, Mike?
I don't even know what to say to that, James.
Yeah. So I'll tell you a few different reasons why I think that's going to be the case. Firstly, interest rates are on the rise. So interest rates on the rise means there's the slowdown of FOMO. When people take on additional debt, they're going to be thinking about, well, when I do take on that debt, instead of it being a 2% interest rate, it's a 4% interest rate. Am I going to be able to service this debt? The second is around the regulation on the investor.
Yeah.
So it's the idea of managing a property yourself it's very cumbersome now. The idea of being able to get a tenant out, the complexity around managing a tenant going forward is tough.
Is this because you're having issues with your tenants at the moment, James?
I don't know if we can talk about this on the podcast. They might be watching. Rising costs for investors. So we're going to see over the next 4 years. Because if we think about with the in March, the change of interest deductibility, so how much of the mortgage you could deduct, that's going to phase out over 4 years. Nobody's felt the pinch of that, but that happening along with investors having to pay high interest rates is going to have a significant impact as well.
Yeah.
And then I'm also very dubious, you might have a different point around when the borders do open up in the future.
Yeah.
Naturally, this country has had a brain drain where more Kiwis have left than others coming in. And we've got a whole backlog of people who I know will want to move overseas and do their OE or explore an opportunity overseas.
Yeah.
So they're my reasons why I think house prices. Oh, and actually, I got one more for you, Mike, before you counter. Is in 2016 when we saw the big spike in house prices over a short period of time, they did plateau for 2 years. So we've seen significant growth in the last 12 months. I think 25% over the last 12 months, which is another reason why I think it'll have to wait for salaries and wages to catch up a little bit.
Yeah, okay, so this is actually one of my predictions is pretty much the opposite. If anything, I think we'll see a plateau until the borders reopen, and then house prices will continue to grow. 25% over the last 12 months, I'd say probably going to be more than that. The reasons, my underlying reasons for that is one, it is simply a demand and supply issue. As the government continues to pull levers to try and dampen down demand, the market adapts. And the market will continue to adapt if that's where the returns are. And I guess what the market is looking at is the same thing I'm talking about. There is a supply-demand issue, which you're going to get that capital growth.
Yep.
I also think that in a little bit of the opposite to you, as the borders reopen, what you're going to see is a backlog. We've always had net positive immigration, unless there's been some sort of crisis like now. I think what you're going to see is a backlog of people trying to enter the country. A lot of our immigration law, promotes people who can afford to live here and who are relatively well off to come into the country. I think you will see that absolutely pop house prices. That will increase demand. It'll increase the amount of money that people are able to spend on it, especially in the major centres like Auckland. So I would say, perhaps a plateau over 6 months until the borders open, and then after that they will pop again. And I think that's off the back of a larger prediction that what you'll see is sort of two streams of economies going forward in the world. You'll see vaccinated versus unvaccinated economies, whereas vaccinated economies will be more open. People will be coming into their economy, so that's good for services in the economy, tourism, pretty much everyone who is vaccinated living in that country. And that's what New Zealand's goal is ultimately aiming to be, and that's part of the other reason why I think you'll see those house prices increase.
So you're saying house prices will increase about 50% over, say, 30 months?
I wouldn't go 50% over 30 months.
Well, if we've gone up 25 and you're saying it's going to be somewhere similar with a little gap in the middle.
Yeah, okay. Let's call it.
Yeah, I think the other point, which I think we can both agree will have a big impact on this, is who is allowed into the country, and also who is allowed residency, the speed of residency applications in the future, which is completely stopped in the current environment. So that will be quite interesting as well to see the impact either way.
Yeah, absolutely.
Yeah. You're being so PC with me, Michael.
It's because it's all on camera, James.
Yeah. Okay, my third prediction and final prediction, although I was just thinking of another good one while we were talking. In fact, I'm going to quickly chuck it in there.
All right.
I'm calling, I'm not going to say the death of the salary worker, but certainly if we think about this 10 people in the economy, more of those 10 people will be on contracting type fixed term contracts, coming into a business with their skill set, working and then moving on to another business. I think salaried employees going forward the world is moving too quick. We're much more dynamic. There's projects people come together for to fill their skill set and then move on.
And I think, just coming from a bit of a tech background and large institutionalized background, every time you hear someone throw in words like dynamic, you know it's complete crap. So I'd ignore that one.
So that laugh was so bad. Oh, that was a great zing. I'm going to move on because I didn't actually think through. I 100% believe it, but I didn't think through that argument.
I think if you're talking about gig economy workers and that sort of thing, you're
I
talking
don't
about
even know what a gig is.
Okay, yeah.
Are we talking about 5G?
Yeah, keep going.
So my final one is rents are going to increase 30% over the next 2 years. Now, there's actually been quite a lot of people that are predicting this. I'm not going to claim it's my idea, but I 100% agree with them. Couple of reasons for this one. One is the cost of business. If we're talking about investment property being a business, the cost of business has gone up. So interest deductibility is coming off. The costs of, we're seeing inflation rising, having to have a property manager if you didn't have one in the past. Also, your risk factor. So the idea of tenants being able to move out, there's just more of a risk premium in there.
Yep.
So I wouldn't be surprised at all if rents increase 30% over the next 2 years, unless the government gets involved, which I think is much more difficult to implement than they talk about.
Yeah, no, I can't argue with that one. Rents are definitely on the way up.
Cool.
I'll go my last one. And where am I going? I'm going out of space. Space tourism, a complete waste of time. Virgin Galactic.
What is this podcast?
I don't know. Virgin Galactic, whatever Richard Branson just shot himself into space is a complete waste of time. The economics don't stack up. The technology that is sort of developed there will probably shift focus more towards supersonic travel.
Oh, I'm so out of my depth.
And then to driverless cars. So there you go.
Oh, I 100% agree with driverless cars.
Yeah, but I think if you think about where the demand for that technology lies, you know what? I love Italy. I'd go to Italy 6 times a year if I could. You know why I don't? Because it's a pain in the ass and it's about 12 hours away. If you can get me there in 2 hours, I'll go 6 times a year. So I think the technology will shift out of, some billionaire trying to get himself into space, more towards supersonic travel where the demand is.
I've never even heard of supersonic travel.
It's a Concorde, mate. Jesus.
That's great.
Cool. All right, and let's wrap it up there.
I don't even know what this podcast has become. So anyway, that's a little bit of fun. We might do this another 3 months or so with some more bold predictions. I would love it if you popped your predictions in the comments section. Let us know where you think things are going. The world is as complicated as it's ever been. There's a whole range of things from interest rates, crypto, to property, to where work is going, to a whole range of things. It'll be really interesting to see what you're thinking. Before we wrap it up, whether you're watching this on YouTube or you're checking out on Spotify or Apple, make sure to check out our new series, Money Bites. We've just dropped a bunch of brand new episodes. I talk about the difference between a bull and a bear market. Mike, what do you talk about in the latest round of Money Bites episodes?
I have no idea.
So I think we're talking about a whole range. I think the one that's just gone up is around due diligence. So there you go. I've always got your back.
Thanks.
Don't worry. So we're going to wrap it up there. Make sure to subscribe if you haven't subscribed already. We've just hit over 100 subscribers, which is great on YouTube. Make sure to subscribe, give us a review, and also give us a like so we can help spread the message to more Kiwis to make them financially empowered. We'll see you next week.
Cheers.